Bulletproof methods to wealth creation and investing for beginners. Investing is a skill. It's perfectly possible to invest in something which increases in value but doesn't pay a dividend. To attain a great deal of wealth, your money has to grow. For example, if you invest in a stock that does not pay a dividend, you're missing out on the undeniable benefits of compound interest. From forex trading to long-term investing, reinvesting dividend payments is a fantastic way to grow your funds. If you know that hard work pays and you've been brainstorming on how to build greater wealth, you'll appreciate this video. Take advantage of these financial instruments. They are opportunities to create more wealth. Why should you invest? You should invest if you plan to be wealthy or if you are wealthy and plan to keep it. Savings. Your wealth is only one part of the formula. Your savings should be designated for investing purposes. Invest when the opportunity meets specific criteria. Go beyond speculation. At best, your savings account will grow at a minimal rate, perhaps 1% or 2%. What can be done in the event of an economic depression? How to make money after economic depression. You need to know how to make money after an economic depression. The wealth that flows in like an avalanche is the result of cash multiplying upon itself, made possible by investing. Top reasons to invest. Investing allows you to protect your principal while generating compound interest. Compound interest is one of the most powerful forces on earth, making it possible to make money after an economic depression. How to make money after economic depression. As important as it is to grow your money, it is equally important to make sure your initial investment doesn't go anywhere. Investing gives you the assurance that you can retire and thrive rather than survive. It provides you with a solid way to earn income while protecting the money you've labored to earn. A few simple calculations will show you how much money you need to invest and at what interest rate to be financially free for retirement. Investing makes early retirement possible. Ideally, you want to stop trading your time for money and have your expenses paid for by interest. Living off of interest is possible, and investors have found ways to cover the majority of their costs this way, if not all of them. While you may think that wealth is an astronomical number, the effects of wealth can certainly be felt when bills can be paid with dividend payments. Provide a higher level of security for your family by making smart investment choices with your money. If there are small children in your family, time is on your side. You can open an account for them with a healthy interest rate and let the compound interest build into their adulthood. Facilitate a way for your money to grow. As readers of The Richest Man in Babylon know, once you have the education to pay yourself first, it's time to build what you've saved. Investing allows your money to grow securely over the long term. Beat inflation. Unfortunately, due to inflation, the value of money decreases. You don't have to let inflation have an adverse effect on your financial future. Beat inflation by placing your money in solid investment vehicles that are dependable, such as a dividend king or a dividend aristocrat. Invest for retirement. By investing now and taking advantage of time, you can hold real estate, stocks, mutual funds, bonds, businesses, and precious metals for many years. You can spread your money across these investments according to your risk tolerance to have a stable way to grow wealth and retire comfortably. Accomplish financial goals by having higher rates of return than a savings account. You're more likely to hold the funds over the long term. Keeping your money and allowing it to grow helps you make major purchases such as a home, car, college, or investment in your own business. Tax-saving investment vehicles offer different tax opportunities. For example, you can lower your taxable income by taking pre-tax money and investing it into a 401k or other retirement fund. High returns. Typical savings accounts at a bank or credit union are no match for other investments with a much higher yield. If you want more returns than what your savings account can give you, it's time to find an investment vehicle with the appropriate yield and risk to meet your financial goals. Types of investments available. 1. Equity. Equity is a portion of ownership in the company and the right to profits the company earns in the future. Equity investing consists of buying shares or stocks and the interest generated on those shares. These investments might be considered high risk, high reward. With equity investments, The money you put in is only recovered when you sell your shareholdings or if the firm liquidates and distributes proceeds. In general, assets minus liabilities equals the company's equity. Equity is ownership once all debts have been subtracted. Financial sponsors are private equity investment firms that invest in private companies to create demand. You can buy private equity investments funded by sponsors, individual stocks, or equity funds. High net worth individuals can take advantage of private equity investments made possible by sponsors aren't listed on the exchange. The benefit of investing in costly private equity investments is the substantial portion of ownership investors walk away with. 2. Fixed income instruments. With fixed income security, you receive a return through periodic payments that eventually return the principal. Once the security reaches maturity, the principal is returned to you. The payments remain the same for the life of the security and are known to you in advance. The principal is returned to you through either a dividend on preferred stock, coupon payment, or interest payment. Fixed income securities typically have a lower rate of return than variable income security. This type of investment is appropriate for investors averse to risk. There are different types of fixed income instruments including certificates of deposit, treasury bonds, and a preferred stock with a stated dividend rate. For example, if you buy a 30-year security for $1,000 with a 4% interest rate, this investment will pay you $40 annually for the next 30 years. At the end of the 30 years, the $1,000 principal is returned to you. 3. Preferred shares. Preferred shares have a greater claim on a corporation's assets than common stock. Preferred shares usually pay a dividend that does not include voting rights. Dividends are paid to preferred shareholders before common stock. Preferred shares provide a higher level of protection for the shareholder because they are entitled to assets should the company become insolvent. You can buy and sell preferred shares through an online broker. These shares are typically not as volatile as common shares. The interest rate you'll be paid is known as the coupon rate. Although, you may have a rate that floats based upon LIBOR, the international benchmark rate. If a company suspends dividends, the cumulative preferred stock continues to accrue and is paid to the investor after the suspension ends. Non-cumulative preferred stock dividends are gone forever if the company suspends issuing dividends. Of course, a company suspending its dividends is a sign of financial distress. Preferred share dividends are released quarterly and in some cases, monthly. Since this investment type has no maturity date, they are perpetual. Mutual funds. With mutual funds, money is pooled together from investors and then invested in securities in the form of short-term debt, bonds, and stocks. All of the holdings within a mutual fund are referred to as its portfolio. Mutual funds provide the opportunity to invest in hundreds or even thousands of individual securities. There are no-load mutual funds that reduce costs by charging a single expense ratio rather than accruing commissions from selling and buying by yourself. Mutual funds do not include voting rights as stocks do. There are 3 different ways to receive a return from your mutual fund investment. One way to earn a return is through the distribution of dividends. You can either get a check or reinvest the earnings. Mutual funds are required to pass all net income to shareholders. This allows the fund to avoid paying earnings taxes. The payment schedule of this investment varies. Payments are made either annually, monthly, or quarterly. The second way mutual funds generate income is through selling securities with increased price as a result of capital gain. You can also make gains from a foreign exchange. It's treated as a capital gain if the gain is greater than $200. Thirdly, if the fund's holdings increase in price, the shares do too. Favorable breaks may cause your shares to increase in price, allowing you to sell the mutual funds at a profit.